Silicon Valley Bank now under federal investigation. NBC News confirming with multiple sources the Department of Justice, along with the Securities and Exchange Commission, have launched probes looking at, among other things, stock sales made by company executives before the bank collapsed. This as calls grow in Washington for renewed bank regulation and accountability.
I do think that certainly the profits from the sales by the owner should be clawed back because we're going to have to be raising fees on banks in order to pay for the uninsured depositors at this bank and other banks.
And today, despite several smaller regional banks bouncing back in the stock market, Moody's announced a downgraded outlook for the U.S. banking sector as a whole. How healthy are other small institutions like Silicon Valley Bank? Analysts say we will not know the fundamentals until a Federal Reserve report provides a look at combined balance sheets 2 weeks from Friday.
The stocks are absolutely not a reliable indicator. In 2 weeks, we'll know if there's a big outflow or not, but that's the next kind of scheduled data point that we'll get.
Just before its collapse, Silicon Valley Bank blamed its troubles on elevated cash burn from its mostly tech-focused clients. Now the concern is in part whether other regional banks are exposed to similar risk. Today, the pullback in the tech sector continued with Facebook parent company Meta's announcement it would eliminate 15,000 jobs following 11,000 layoffs at the company in November.
Now, on top of all this, today we learned inflation has fallen to 6%. That makes for a complicated economic picture as the Federal Reserve prepares to meet next week. Many economists are now asking if the Fed will hit pause on further rate increases. Lester?